Good morning, everyone, and welcome to the European crossover webinar. We had the Eurozone growth numbers come out, which came in weaker than expected, which put a downside bent on the euro. We've come into some support here that we've had on the 2-hour, which is a 756 area. So we're bouncing off that, or I should say mildly bouncing off that. I think today's going to be quite volatile. I shared that on the tweet. I think it's going to be exceptionally volatile. Some weeks or some Fridays you can pretty much have an idea on overall general direction on the different markets. I think today's just going to be all about levels across the board, and you're just going to have to know those levels. And I think that once we get past retail sales, we're just going to see swings on both sides of the market, I think. So you have to be really adept and have your levels written down and where to go in and come in. And we're just going to move into that. I don't think there's any real news per se. So we're going to have, coming up into the U.S. session, we'll have a PPI, retail sales, and we will have, Michigan consumer confidence. So I think it's going to be just a real rock and roll kind of day. I think it's going to be all over the place, to be quite honest with you. So you should have that in mind when you come into today's session. Some days, as I said, some Fridays you kind of know where a market's going, and it's got, people on one side of the boat on the wrong side, and then it just keeps pressing. I think today's going to be a completely different day where you will see exceptional volatility. So we'll go on and get into the charts and take a look and see what we got and what we're expecting. Once again, some weeks or Fridays, I can get a pretty good feel where I think a market's going to go. But like I said, today is really going to be about knowing your levels, and you ought to just write those levels down. Forget what I say. Just go on and look at when we go over the charts, and if there's something that you are leaning towards, then I think that's the way that you're going to want to go on and take a look at it. We'll go on and take a look here at the euro dollar. We did have that rally yesterday, which wasn't a surprise whatsoever. I mean, because the market was set up. And I keep, harping on this, saying is that for those who just want to look at charts and that's all, or that's the way they trade, you could tell this market was sold out. Because after Draghi made those comments, yeah, we did take a dip, and we can look on the 30-minute. They defended the 691 pretty well, but the market, and I'd said that the day before that, I felt was, that's it. It was kind of like sold out. They'd thrown everything, including the kitchen sink, at the market, and that was a story about them possibly buying, municipals. So they're really going to go on and come at it. And then Draghi made his statements basically stating that the exchange rate had really hampered their potential for growth, and so that was essentially him talking down the currency. And we came down, and we didn't even make new lows. We defended the 691, and so we were able to go on and start hitting right here the 756. Once we got above that, I knew that we were going to go on and move higher. At that point, it was just a done deal because the market was set up to go on and take out these people that had been short because we hadn't been able to go to any newer lows. I think we're going lower overall, but in the short run, we were exceptionally oversold. So we came up here to, I think it was 809, and then we sold off. Now we came back here at the end of the New York session, and I think we got up to like 824, I think it was. I actually got up higher. I think we went up to 830 right before the end of the New York session, and then we kind of made one more last step, and we've since slid down. Now, the market is under pressure. I mean, it's obviously coming up from the 756 area. But the market is under pressure with the idea that, it's pretty much a fait accompli. as far as you know, extending, expanding, and in all likelihood, probably even cutting rates further, for the ECB. So it's pretty much, I think, written down where we're just going to go, ultimately going to be going lower in the euro. It's just that we're excessively oversold. Obviously, if we get a weaker retail sales claim, I don't think it changes the idea that the Fed would be raising in December, but the market will have to price in that. Now, like I said, in light of that, we'll have to go to where the SPOOs are. We're just going to see a ton of volatility, I believe, today. So obviously, we've got the 756. 728 is the next key level. You've seen it back. This goes back to the FOMC minutes release. And then obviously 702 is going to be huge. We talked about these levels before when I was getting long the other day in the 680s. And so we've got 685, 661. If you want, we can look at this on a little bit bigger basis. The next key level is 626. I think after that it's like about right here at 580. I don't think we're going to be hitting these numbers today, but the key is the 702. If we could get a 2-hour close below 702, which really is, if we get down there, I think it's going to scare the market being on a Friday, and we could accelerate. But I really don't necessarily expect that unless we got a blowout number in the retail sales. Then it's just going to weigh on it, and then being a Friday, anybody that may have got long here is just want to just get out. So I don't think necessarily in the long run the bears have control, but I don't think at this point necessarily that bulls have control on a short-term basis, nor bears have control on a short-term basis. So I think it's all about just trading these levels in here. And so if we get a decent retail sales, we'll probably make a trip down here into the 720s, and that's probably a great area to go in and cover. And then the market try and swing back up a little bit. Then if you want, you can lean back on them again and then see if they really want to push them going into that Friday. Because if we get a good retail sales, it pretty much seals the deal as far as the Fed taking action, in my eyes. I mean, as far as the market, it doesn't matter whether you believe the Fed will or will not. It's whether or not the market believes it at the time when it's pricing in the risk. That's what a lot of people, they miss the boat on saying, well, who knows whether they're going to do it or not. That's silly to look at it that way. Well, you're right in the sense that no one knows for sure, but the market prices those risks in, and you're doing yourself a disservice if you don't look at it, I think, in along the lines of that perspective. Just because the number comes in, it doesn't swing the definitiveness that the Fed will go on and hype, but the market prices that in. You see what I'm saying? So you have to factor that in as being, you don't want to be thrown about back and forth at the whims of when an economic report comes out, but you look at it in the context of the bigger picture. So if you know, I mean, obviously we've moved to hella lower here on the euro dollar, and it looks like the euro dollar will continue to go on and go lower. So you know that in all likelihood, the best way to play this is going to, if you're trying to be cautious, is to sell any rebound rallies. So when you see a number like that, and it increases the likelihood that they're going to go on and push lower, obviously that's going to be the way you want to go. Then you factor in it's going to be a Friday. The market could easily go on and get spooked, and we could start to accelerate, because then people will be worrying, hey, if we break lower, I really don't want to be picking it up if we go lower here, because if they get past 702, like you might have some people saying, well, I might cover my shorts in here, but I'm not going to buy it, get long, because, if this thing gets a foothold at 702 and it's a Friday, everybody's going to be scared and it's probably going to accelerate, and that's how people start to think. Whereas if it was like, let's say, a Tuesday or a Wednesday, maybe even yesterday, Thursday, people are more willing to go on and take the other side as we come into these levels. But being a Friday, and then on top of that, you had the Eurozone growth come in slower than expected, then that's going to weigh on that sentiment, and it's just going to be. And so right now, the bulls are going to let them have what they want as far as pushing a little bit higher. But as I said yesterday, I think that any moves above 108 are going to be sold with impunity in the sense that people are going to say, hey, I'm putting on the trade. I don't care. I know I'm going to get my money back. I know we're going to go lower. And then if you want to go on and trade it as far as letting it dip, you take some off the table. Letting it dip, you take some off the table. That's one way to go and do it. If you're thinking, it's exceptionally oversold at this point, I don't want to press my bets that hard on this. So that's one way to go on and take a look at it. We're going to move into the 30-minute on this. So you can see where we came down to this 756 area, and we had that marked off in this zone. So we found the support here. We're making this run. Obviously, 789 is key. As I said, it looks like the market wants to go and go lower. We can take a look at it here on a fib. So 791 is going to be the 50% of this range here of 830 to 752. As I said, I think they're just trading in ranges for right now. When it came to, no one's going to go in and press on either side right now. I think that once you get past retail sales, if it's a good retail sales, then you have to be careful at that point playing the ranges, other than saying, hey, if we move down to 727 on the print, I'm going to go on and cover. If in that sense, you could look at it. But like I said, right now, they're just going to go in and trade these ranges. As we came down here into the 756, you're going to go in and see people cover the shorts. I don't think it's as much buying, although I did see where Andy picked it up, but he's been bullish, so props to him. He was looking for higher prices at this time, so he's was buying it here and already scalped out of it. Which is another point I want to make is in different markets, depending on the type of market you're in, it makes sense at times to be scalping. And really, if you think about it, the way these markets have been trading over the last month, it's made more sense to go in and scalp. Some people give me a hard time about scalping and acting like I'm just picking and choosing little spaces. I mean, I've called scalps, just called a scalp out the other day, right there on the Morning Edge webinar. But like I said, I'm just trading the way that the market. I mean, that's my forte, or that I feel comfortable with. But right now, like a pretty good example is today as we move into the session. No one's trying to press the downside too hard, although we had come off quite a bit. But we'd come into some very key support, and this is a good area to go in and cover. And so the markets, although I wouldn't have been buying here. Okay, there's a difference between covering and actually straight up buying. Andy feels real comfortable with it, so he went and bought, and then he already scalped out for 20 pips. So that's great. That's what I'm saying is you want to go in and trade with the way the market is now. I wouldn't be going that direction then once we go past retail sales, other than I would be using moves lower to go on if you want to cover. I think depending on how the retail sales report comes in, it could get dangerous buying this thing if the number comes out good and then we take a dip. Because if the market rallies up, we may only make it up to 756 and then people turn around and lean back on the short side. So I would be very cautious. In this situation, I'd be more apt to just play the overall direction because I think today's Eurozone growth numbers, it basically bakes it in the cake that they're going to go on and extend and expand the balance sheet, and all likelihood also cut interest rates. And Draghi's already talking about, groaning about the exchange rate. And I think you have to take that into consideration. So let's go and move into the other charts also. Andy says, thanks for the mention. I do see a higher push in euro today into the 850.60, and then I shall be very short on a retest of the low 107s. The only way it makes it up there is because the retail sales comes in weaker. And it's just going to be just which obviously you're looking at from a technical basis. Andy uses fractals, and I'm not necessarily a fan of fractals. I mean, they're okay, but I just think each, in Mark Douglas's book, Trading in the Zone and the Disciplined Trader, he talks about every moment in the market is unique. It's unique in the sense that you don't know how many traders are just bailing out here. Traders are putting new positions on. Every instance, he points out, every instance meaning every moment in the market, whether it be last week, today, this morning, 5 minutes ago, is unique because all the players are all different. Everybody has their own decision. So I don't think that you can compare one to another. I think you can compare events where, like, let's say it's before an interest rate hike, or not, where the data has come in weaker than expected again, like it did, whatever, 3 years ago or something like that. But like I said, Andy's correct. He has his approach, or actually, as Johan had mentioned, hey, it's how you approach, how you apply your approach. So I don't think there's one any better than another. I just marked, to me, what I think, believe works for me. Now, getting back to this story is that, and I've already made this point, I made this point 2 days ago, that once we got above 702, I was going to be a buyer at 680. And the reason I was doing that is because, not only because of my level, but I was looking at positioning, and positioning analysis is different from price structure analysis. But I was thinking this market is really overdone in the sense that I don't think it wants to go a whole lot lower. We'd come into the 78% and so forth. So that was my plan, to go and be buying here in the 680s. And so we got this rally up. The market, started to lean back down again, because then they had the story about the, potentially buying municipalities, debt, things like that. So that story came out 2 days ago, and that weighed on the market. So then we got this rally back up here, but then we came back in, which is natural. But then Draghi went on and was crying about the Eurozone, but not the Eurozone, but the Euro's exchange rate, and how that had weighed in hurt growth. And so then that sent it lower, but we defended the 691 on a 30-minute. This is obviously on the 2-hour. And I thought, the market is positioned, and when it got here, it was in the 30s. I was like, man, this thing, they already threw the kitchen sink at it yesterday, which was going to be on Wednesday, and then now here's Draghi talking, and we didn't even go to new lows. This market is really sold out, and I thought it set itself up. So now we've made this run down here to 756. Made this run down here to 756, and the market is, a very nice support level. We have our zones, colored in. I do this, like I said, I didn't get this from anybody. I came up with this by myself. I would, take a look at markets. I like the way that 50 pips would point out his levels, but there were so many levels, and I couldn't differentiate stuff very well. So then, as I started to look at markets on a bigger time frame, I started to see different areas where I thought that the market, in a sense, congregated. And so that's how I came up with these colored zones. That's some people ask me from time to time, what do they mean? How did you come up with that? I didn't get them from anybody. I just did it to help my own trading. I've seen some other people do it. I mean, they probably do it for their own reasons. I don't know. I can just tell you that I didn't get it from anybody. I basically learned the levels from 50 pips. Because like I told you before, I wasn't no gifted trader. I didn't have anyone tutor me or whatever. I just had to learn the hard way, and I just kept looking and looking, and then I kept thinking, well, there's got to be something beyond that, and so that's how I ended up coming up with these colored zones. So anyway, getting back, so that there's a story on that. But getting back to this is, if the retail sales comes in not as great, and maybe it could come in just barely subpar, and the euro would still going to rally. But it's going to rally because of the positioning, and it would allow for a move up. That being said, I think today's so volatile, you know, Andy has a plan. He thinks, hey, it's going to move up higher into the, what I think he says 850s or whatever, 850s to 60s, which is really up here towards the top of this zone, which may be the case. It's just, I think from a positioning standpoint, after you lose in excess of 800 pips, what do you think the market's going to go and do? I made the point in other markets too. There's nobody left to sell to when you come down here. That's why. And we were even talking about the story, you know, I forgot what the story was. Oh, it was on those municipal stories about the potential for the ECB to buy. And, you know, a lot of the big banks were saying, you know, we're not doing anything right now because there's not really nothing down here. And that was my point. We're not going to make an extended leg. So as I said, I try to combine my analysis by doing straight up technical analysis and on the levels and support. And then I look at Fibonacci for confluence. And then I factor in how the market's positioned, how it looks at it, and I've talked about that, the theme and the tone. Then positioning analysis, meaning we're so far overdone, there's nobody left to sell to. And then price structure analysis, which I use pretty successfully this last week or this week in the crude oil market. So that's my take on that. I know we focused a lot on the euro. My point is, I can't say we're going to be heading this way. Some days I'll have a greater confidence on how I think a market's going to break, depending on price structure analysis, the overall theme, positioning. I think on a very short-term basis, the bulls and the bears, no one has. I would say it's almost even, although the bulls have a slight upper hand at the moment based on positioning analysis. So we've fallen 800 pips and the market's just oversold. So they have a slight hand. Although even Andy said he's looking for higher prices, but he's going to short it for a move back all the way back below 107 or testing 107. And so that's what I'm saying is today's going to be a very tricky day. I think you have to be careful. I think you can do well, but you're going to have to be very, very careful. I would be very patient and I wouldn't necessarily sit on the sidelines, but I'd be very patient and put in my orders so you don't get whipsawed around. Although I think if you were going to do something and you said, I have to do this or whatever, I think the safest bet would be to sell the euro. I wouldn't say no matter where you're at, like I was saying here, when we were on that Monday, a couple of weeks ago, I said you can sell the euro wherever if you sold it down here, you're getting your money back. If you sold it here, you're getting your money back. Doesn't make a difference. And I said that 2 Mondays ago. And now here, the safer bet's going to be to short the euro, but I think you're going to want to be selective because we've already gotten so far lower. And I hope that helps you look at other markets at the same time. Now we're coming into some very key support that exposed, so let's get onto that really quick. I thought that was a good teaching lesson on the euro. Now here we are into SPOOS. You remember my target was this 34, we talked about this 34.25 before, and this is where the market had rallied and we ran out of gas and saw a very nice pullback. And I was looking for 20.06 at the time. Remember, if you remember this correctly, this is a Friday before. I thought it was fantastic that the SPOOS made it up to 21. I thought, okay, we're going to dip. Oh man, it looks so obvious, blah, blah, blah. Look, we've got this, you know, almost like a graveyard doji, half ugly shooting star. Oh man, this is an easy trade. And then we only dipped to like 13 or 12, and the market rockets on the closing line. What the And then I said, okay, well, this thing, 26.75 is resistance, which it was. We came into the Sunday session, we backed off, and then I said, you know what, they're going to 34.25. They're going to 34.25. And so when we got up here, and this was in the early in the European session. I said, this thing is a short. The thing was, I was asleep when it hit these highs, but by the time I woke up, it was already like 87, I think, whatever. And no, I'm talking about here, well, over here. I'm wrong. I'm talking about here when we were, I think this was right in here. That's right. I think it was this one here. So I'm getting confused with this one. But anyway, we made it up to this 34.25. I think we did this, I think it was into the mid of the European session. It wasn't, if I remember correctly, a very, very early U.S. session when we saw that 34.25. I think it was actually mid or early European session when we got to 34.25 and said, hey, this thing is, that's it, you know, this is a great short. And we saw a nice pullback to like 22-ish, and then we kind of flambled around 25, and then we got that leg lower, and I was looking for 06. We bottomed at 750, and we, you know, since obviously we moved higher, okay? Well, my point is not to talk about that and give myself some kind of pat on the back. No, my point is the significance of 34.25. So as we're working lower here, we're coming into that, and I think that's going to be a very nice support because you realize that when it hit 34.25, we sold off almost all the way down to 6. Well, along with this 34.25, we have the 161% of this high, which is essentially 2110, to this low, which is 2062, before we had a nice bounce up, and that's 2032, which is 161%. We got 34.25. I think it'll be a decent area to go in and cover. The problem is the sentiment is overwhelmingly bearish, and we're into a Friday. So you have to be careful because the problem is people may be willing to cover, but they're not willing to go in and necessarily buy the dip. Someone was asking me about this yesterday. Last Friday, when we had the release of whatever the economic number, I've got a good memory with numbers. I can't remember all these damn reports, whichever one gets released out. But, you know, the market, people perceived it to go on to be bearish. And then they freaked out because the market was rallying. Okay, and some experienced traders that freaked out, which I was really kind of like a little bit surprised. But I said, don't worry, we're going to go and work lower. And we saw a very nice pullback. Actually, it was this one right here. And I said 77.50 is support. I didn't think that was going to be the bottom. All I said was 77.50 support, don't get greedy. And that turned out to go and be the bottom. So we had a nice rally back up. And then another experienced trader on the close was like, can you believe this? This is all a bunch of BS. It looks like the Fed's going to raise rates, and we go in and close down only. Dude, don't worry. Don't get your panties in a wad. We're going lower, you know? And so my target, as I said then, was 46.70, 46.75. So we did see that yesterday. But then someone was asking me, oh, but what's he going to do is 46.75? You know what, dude? I don't know what the F is going to do at 46.75 because the environment has changed. That was my target, and to be honest with you, I just kind of pulled that target. It wasn't like a confluence of a fib. I just thought that, well, it actually is a good level because you can see here was the top of this you know, it would look like a hanging man, but the market turned around and rallied up higher. So I thought 46.75 was pretty key. We actually made it to like 49, and then when the market did get to 46.75, it just barely popped a little bit, and then it started going heading south of the border. But the thing was, that's my target, but in this environment, it didn't mean that's where you buy and you start turning around. And that was an area for me. I'm saying this is a great area. Cover your shorts. I wasn't even in the market at the time because, like I said, I thought this 57.50. I said that was a very nice, interesting area. Good area to go in and cover at the time. We did dip low, and then we came back to test 57.50, and then we turned lower. But the sentiment as we go in towards the end of the week, and now people are saying, whoa, it doesn't look like it's going to rally after all. Then I saw some stuff about, which was somebody posted it. I think it was Vader that pointed it out. You saw the biggest withdrawal of equity, the 401k, whatever. But the biggest draw in equities that you had seen since 2011. So people see that and they say, well, I'm not going to be on the other side of the market. So they may cover as we go down here, but they're not willing to go and buy until they get to an exceptionally low level. I think this 34.25 and 2032 is very low. And that may allow us to rally up to 2040, maybe only 2038, but we'll probably go and see a rally. That being said, the sentiment is overwhelmingly bearish on this market. It's just the way it is. It's overwhelmingly bearish. So that's where we stand here on this one. And although I think we're going to go lower, you're going to have to be very careful on this market. I'm going to be playing it really cautious today because, like I said, I think it could get a little bit wild and woolly, and I'm just not going to get myself into trouble. I'm not going to act like as if I'm doing this and that because a lot of my targets have already been met. The spoons here at 46. Now I know that the overall outlook has now turned quite bearish, and also one of the concerns I was looking at, and I tweeted that out. I retweeted someone else's, is that we had copper at 6-year lows. So I knew that that was going to also weigh on sentiment. Also, crude oil had hit my target, and you remember my target was the 4282 on this on the on the head and shoulders, which was the left shoulder, the head, the right shoulder, neckline was at 4558. So we got to this low, and we'll talk about that. It's time for a break, and we'll get back on that. Just a moment. Okay, everybody, welcome back to the European crossover webinar. I switched over the chart from the crude to the smooth because we were coming into this key support that I told you about, this 34.25. Remember, this was where the market ran out of gas about a couple of weeks back, 3 weeks back, and then we saw that pullback towards 2006. And this 34.25, I had talked about this before, which I just look at a continuous chart. I don't look at any month to month where it rolls over from December to March and so forth. Just run the same chart over. It's continuous. Because ultimately, I think the markets are just going to respect the levels. And this is a case in point, because I remember 34.25 being so huge back in January and February when the market would vacillate on either side, and 38.75 was key, as was 18.75. So when we got there, we did see that pullback. So getting back to this that's why I believe this was significant on this test, and that potentially we can see it move back up to 2040, maybe even 2038. I still think that we can take this dip into this 2032, but I think today you're going to have to be exceptionally cautious in trading today. And I know that I'm going to be careful the way that I trade, and even with the euro, I think that we're going to go higher. Yesterday, I missed this move up to 830, and then I saw it, I think it was trading at 810 or something, and I said, I did a quick fib, and 824 was the 38% of the recent move. So I watched it as it went higher, and I wanted to go and sell at 824, 825, and I think the market stopped like at 823.5, or maybe it hit 824 in a bid, but I wasn't able to catch it, and then obviously we went lower. I never would have ridden it all the way down to here. I would have been happy just to get out with 20 pips and then see if I can reload or whatever. I still have that short that I got stuck into, which really ticked me off, and because I didn't even realize, I woke up late yesterday, I didn't even realize I was short the market when it was all the way down here. I have the account information on another screen, and I thought I had canceled that order. So I didn't even look at it, and I woke up late to start with because I watched the NBA game, and it was a West Coast game, which made it even later, so I was already tired. So I was just looking at the charts, and I was thinking, yeah, it's too bad I, canceled that order. Wow, look, it's already pulled back. Oh, well. And I didn't give it any thought. So I didn't even know that I was short until it got to like 758. And then I'm in the red. I'm all pissed off. But anyway, I kept that trade, and I thought about exiting right here because we did come down 56. And I didn't because I was looking at potentially a move down to 742. And then I would cover, and then I would just get me short on another move back up. I wouldn't have thought that it made it back up here. So even if I were covered, I would have probably got it short like in the 870s or something, 770s. But the thing is because of that, I should have taken that. I just feel that I don't have a good grab on. Sometimes I have a good feel, and you'll see me scalping in and out, jumping in and out. And I kind of got into it with one guy yesterday, which kind of also, I'm going to make a note about that, is that, now I still have that short. I feel comfortable holding it. I'm not happy that it's up here at this level. And usually I just scalp out. I just move in and out of the market quite quickly. And so getting back to, I had one guy that likes to come onto my stream every now and then and give me a hard time, thinking, hey, like you act like you know all this. I don't. I'm just showing the things the way I trade, and I think that you don't have to have a whole lot of things in your toolbox and pay a whole lot of money for advisory services, but just keeping it simple. That being said, I probably shouldn't even have engaged the guy because he'd come on before. That being said, if anybody thinks they're going to diss me or whatever, I'm not even going to reply anymore. I'm just going to block your rear end. I'm not even playing anymore about that. I just won't. I'll just straight up block. I'm blocking everybody that I have any hard time with. I won't even reply. I'll just straight up block. So you probably ought to be careful if you think you're going to go on and pump me. I just will straight up block you. I'm not even playing that game anymore. To be honest with you, I shouldn't even engage that guy because he's just a demo trader. But like I said, sometimes I'm the kind of person, I like to engage with people on a friendly thing, but when someone says something or whatever, I'll go in and reply in a good way. If you want to say I'm wrong, if you think you want to say you're crazy or whatever, that's all fine. But if you want to make it personal stuff, then it really gets me upset because I try and help people out. Like I said, I'm not trying to sell you or market anything. I don't have anything. I don't have an advisory service. My Insight Call is a private, closed feed that's just for other traders. And I used to post my trades or levels only on that and only just a little bit on the regular Twitter. But now lately I've been posting a lot of my stuff for levels and trades on my regular feed, but I still use my Insight Call for posting news, and maybe sometimes if I just don't feel like putting something out there, I'll put it only on Insight Call. So anyway, so that's enough about that. But let's go on and move into the crude oil. As I talked about, this is another thing here, and this is why I'm trying to be cautious, is that we talked about this at the beginning of the week. I already saw, I saw this head and shoulders up here, and I had a projection of 42.82, and I had 43.56. I think 43.78 was 78%, I believe, and it bounced off of that, hit it to the tick, or 43.82 hit it to the tick. Then saw a nice bounce on Sunday. That was right here, and then I talked about the 43.56 being a major level. We hit that, we bounced off of that. So ultimately I said, hey, looks like we're going to 42.82. I actually covered part of this stuff way too early. This was really a bad trade, even though I made money. It was really a bad trade because I came back in it at a very poor level, and I could have easily gotten my head taken off. Not bad, but just, would have gone rally that I had to go in and cover. I still made money, but I was saying about support being here at 43.11. We did bounce off, but ultimately we went down eventually to this 42.82. We went and exceeded that. I thought this was a great area, and we did rally into the Asian session, but not a whole lot, and then we came back lower. And so I was looking at 41.79. This is this area I was talking about. And all yesterday morning I was looking, I wanted to go in and get long here, and I was waiting for the gold market to stabilize because the wheels were really coming off the caboose at that time here in the gold market. And so I was like, man, this doesn't look good. And we're going to talk about gold real fast also. Had one exceptional trader. He was talking about getting long gold yesterday, but I told him I'd rather see a close, to see the market get above 84. And we're above 84 because we've got this long-legged doji. So I think this is going to be volatile. I know it sounds like I'm all over the place, but I'll go and get back to that. So I was waiting for the gold to go on and stabilize because everything was getting kind of a little bit scary yesterday. Scary in the sense that, like copper was still way at the lows, gold was totally falling apart. And so I was like, you know what, let me let things settle down so, maybe we'll take an even further turn here on the crude oil. We did go on and rally off of that area, but we came back down even lower. And I have a level on the 4H from way back, and we'll take a look at this quickly. We don't have a whole lot of time, but I think, like I said, it's all about levels today. See, here's the 41.35. We didn't make it there all the way, but we got there with the exception of a few cents. My point is that these markets are exceptionally bearish today. I mean, they have a bearish, I don't want to say theme, but the tone of the markets are exceptionally bearish. So I think you have to be very careful. I think this is a great area here overall in the crude oil market. And when I was looking at it here at 41.79 yesterday, I was like, well, how much are you willing to factor? Because I think this is an exceptional low. And, how far would you be willing to let this market go, knowing that even if you got in at this price and it went lower, you'd ultimately probably still get your money back anyway. So I think today is a day to be careful in the market. I can tell you, like I said myself, I should have covered that short that I didn't even know I was in, which really ticked me off because I was up a lot and I didn't even know I was up. So I don't base it like, hey, I came in too early and I misread the market. That being said, I should have gone and covered on this move down to 756. I know later on I saw Andy actually went long at 752, but he's bullish the euro. So I should have gone and covered, but I was actually still down a little bit. I think it's down a little bit, or actually no, I think it was like almost even or something. I don't remember. And then the market starts working higher because I thought we'd make it into the 740s. I go, I'll cover there and I'll reshort on a bounce. But my point is, I've already made that mistake here. And I think the markets are being really tricky today, and I don't have a good feel on the market. Even though I trade the technicals, I like to have like I've got my pulse on the market. Well, my pulse is on the market, but it's a little bit off. Even though, you know, here in the SPOOs, we're in an exceptional area. I talked about this 34 and a quarter just a little while ago, but I'm playing it really cautious today because I think it's going to be exceptional volatile. Hey, you know what? Maybe some of y'all are going to make a killing today. Maybe y'all are. You see what I'm saying? I'm going to play it kind of light because I just, you know, I just don't have a good feel on the way that these markets are acting today, and I don't want to get myself in trouble. Okay, so I'm going to be playing it exceptionally light today. Some of y'all, if y'all want to goose it or whatever, y'all might make a killing. Hey, props to you. I just don't want to put myself. For one thing, I don't even like to trade on Fridays, although I'm getting back to where I'm trading more actively on Fridays as of recent. And today is going to be a great day to trade with retail sales, PPI, University of Michigan. But I think you're going to have to be very careful at the areas that you're going to come into. Now, getting back to the gold, great call by Blake Pipzar because, you know, I was looking to be a buyer here in this area, and I caught some of this here, and I thought this market could really bounce if euro stabilized. But the euro didn't stabilize. And that's why I tell you it's important to put all the pieces together. So when this market got up here, made it up to 95. But on this first run up here, it made it to like, what, 92.50 or whatever. I got a little bit greedy, and I was only looking for, I said, you'll probably get a $3 move. And the market actually broke even lower, so you're about $2 under the water. But we did get the $3 move. And we got beyond that. We got the $5 move. And I was thinking maybe we'll even bounce up here towards this 1102. Got too greedy. It came back, and so I took the $3 out of the trade. That's fine. And we came back up to 95. But this whole time the euro was acting like crap. And like I told you, the gold got tired of waiting. And gold says, "Screw this! I'm not waiting for you." So that's when we saw this move lower in gold. And I told you yesterday before we broke lower, we talked about the sentiment. And when I say the sentiment, this time I mean when we were talking, I said, you know, Blake was saying, you know, the longer we stay here, the more apt that the market is to go and continue. And I was agreeing with that in the sense I was saying, hey, look, a lot of traders are like, you know what, this sucks. You know, it's not going up, and it's just sitting here. I bet we're going and slide. Now, I thought that any moves down below 80 would not be you would not see a lot of follow-through, okay? Now, we did go in and rally back up. We rallied back up hard. But I was even surprised to see how far we fell. But I thought this market would rally up. When we rallied up to this level here, at first I was like, oh, my God, it rallied so high because it wasn't that long that I had just found out that I had been short the euro. And what I did was to hedge my euro, I went long the euro futures, the 6E contract, because I thought, you know what, we're going to bust out on the euro. I'm telling you, we're busting out. I already said it was sold out yesterday. Draghi just came on. He was crying and bawling about the exchange rate, and the market didn't go to new lows. It's going to bust higher. So I was dealing with that, and I got long the 6E, made the money back. I put on a little bit of size, and I was able to jump out as we got out above 108. So through this, I didn't even see this, and I didn't know the gold rally. So it was actually coming off 89. I was like, oh my God, I did a quick fib of the recent range, and it went right to the frickin' 78%. But because I was so wrapped up in the euro because of that mistake, this was already down to, I think, 88 or 87.60. I was like, don't go on it. I go, I won't chase it. And then, of course, we ended up working much lower. We turned around and gave all that back and slid back down. So that's why some of these markets you have to be ready and willing to act quite quickly. So getting back to the thing is, today I'm playing it cautious. there'll be a lot of money made, I think, and a lot of money lost today. And I just don't want to be on the wrong side of the boat right now, because I would be more aggressive. We hit my 42.82 downside target. We actually overshot a little bit, but we hit it. We look like we're going to get a nice bounce. And so in this kind of situation, I'm going to have a lot of confidence, because I'm thinking, man, there was not only did I hit my head and shoulders target, it feels good. It looks like I'm really got my pulse on the market, and I'd be aggressive to step in and buy this market. But we came down here, and I was like, okay, we're at the bottom of this zone. This is a great area, but the gold, the wheels are coming off the caboose in the gold market. And I go, I got to wait for it to stabilize, blah, blah, blah. But you see how this market keeps going lower, and the sentiment is so overwhelmingly bearish that I know the bulls are going to be scared to come in, and when they do come in, it's going to be only for little bits, or unless it's like a strong hands in here that say, screw it, I think that we'll be back up to 42.5, and they sit on it, and they're not worried about it. Well, I'm not big hands, big pockets, so I'm not going to be sitting there, and it's not even the way that I trade a market. So that's what I'm saying is, when I look at what's happening, it's overwhelmingly bearish. I thought we'd stop. Worst case would be this 41.79. We'd probably rally like crazy. And we did, but we turned around and we gave it all back. So I'm like, well, I don't know what's going to happen here now. Man, this looks terrible now, even though very nice call on the downside move of the crude. And then, like I said, we've already seen this big fall here in the SPOOs. I was looking for 46.75. We've hit that, but now we've exceeded it, and now we're into a Friday, and everybody's all nervous. So that's what I'm saying is, I don't want to put myself in that kind of position. Also, copper continues to remain very low here, which is spooking the market. And so it's all coming together, and I do not want to be on the wrong side of the market. I still have my stupid euro short, which I didn't even know that I had the market on. So that's all I got right now, that I'm stuck in right now. The dollar yen has rallied up to this area, but we haven't done anything since then. And so the dollar yen should be a whole lot lower when you look at how far the SPOOs have fallen. So you better be careful on this dollar yen. I've been cautioning y'all. If we find support, and it surely doesn't seem like we would, that we would turn around and start to rally up to 62.50. You got to be careful on this dollar yen, because they'll probably take your head off. There's a reason why it's holding up still relatively well here. 22.14 is big. I mean, if you were short dollar yen, unless the wheels come off the caboose on SPOOs, I would be looking to cover 22.14. Talking about the wheels coming off the caboose, let's talk about these SPOOs. I think that 15.25 is going to be huge. 1875 is the old bias pivot that I told you about. I remember I was with Anthony Crudele on his show. This was back in, I think it was like the third week of January maybe, and I talked about 1875, 38.75. This market would just trade back and forth from these levels way back in, well, I'm looking on a 2-hour chart, but anyway, way back in January and early part of February. So this 1875 is big as Dallas, okay? But right under that we have 15.25. So if the wheels come off the caboose, 2015 is at 38% of the lows that we saw in September here, and the highs we saw way up here. And let me tell you, friend, I know what I'm talking about, because at 1875, and I'm going to say it again, I don't care if nobody likes it or not, 1875 and 1865, when everybody was losing their shorts and saying that the stock market was going in the toilet, I said the U.S. ain't China. I said it at 1875, and I said it at 1865, and we rallied, okay? So it's the same token when I said I thought the market was overdone here, and I think it was, I don't remember, okay, yeah, it was at 92.50, that's right, because I said the old bias pivot. So these bias pivots work pretty doggone good, because you saw this 92.50. This is what I was referring to earlier, where it actually hit this area, I think like, I think it hit it super early, like maybe 6 a.m. in the morning, London time, and we were already pulling back. And I said, this is a great area, this should be it, 92.50, and we shed 25 handles. Well, I was looking for 46.75 from this, last Friday, and I think the market's overdone. I think it's really overdone here. But if for some reason the wheels come off the caboose, this is an exceptional area to go in and come into the market, I believe. This, if we were to get up here, we could shoot past this major bias pivot of 1875. 15 and a quarter is going to be a very nice level, and 2015 is at 38% of 1862, the September lows, to the most recent highs here at 2110. So if the wheels come off the caboose, I'd be looking to go in and buy here. It's still a little bit tricky on a Friday, so I would say be careful. Matter of fact, you might even wait for it to go in and confirm. So I don't want to tell anybody, jump in, I'd be buying, and then we take the slam down to 2006. I don't see any of that happening, but I don't want anybody to get in trouble and say, man, I got stopped out at 2007. Thanks a lot, because now we came back. You said this was a great area. Well, I'm not a broker. I can't give specific buys and sells. I'm just saying this is going to be an important level. I'll be looking to do some business, but I'll be careful. It would depend on the time of the day, and I'll give you an example. And I'm looking at Central Time. I'm not looking at London time, New York time. I'm talking where I live. But if this market is heading to new lows and hitting in 2015 at 1:30 Central Standard Time, which would be 2:30 Eastern Time, I think you'll see a bounce, but you're going to have to be doggone careful because we could really start to plow through that thing. I don't see that really happening, but you have to look also at the time of the day because, like I said, we're into Friday. The market is exceptionally bearish right now. You're going to have to be very careful here. So actually, it's time for Blake to come on. So let me switch on to that.